This is BTV Business Television.
Welcome to BTV Business Television. I'm Jessica Kaczmarczyk.
And I'm Taylor Tone. On this week's show, we focus in on two timely sectors, energy and defense. Both are being reshaped by powerful long-term forces.
That's right, Taylor. Energy geopolitical tensions, electrification, and the growing need for energy sovereignty has driven massive infrastructure spending in the sector, which in turn has created widespread disruption and opportunity.
And it's really an opportunity for US investors to get direct exposure to one of the US's next emerging lithium developers.
These minerals are of absolute importance to the United States economy, be it from a defense perspective or be it from a semiconductor and AI perspective.
The same goes for defense, Jessica. As global tensions rise, so does international defense spending. And Canada is doing its part by meeting its NATO 2% defense spending commitment, which will rise to 5% of GDP by 2035, creating fertile ground for players in the space.
We're one of the largest suppliers of defense solutions in Canada today.
Antimony is a fascinating mineral. It was not one that was well known. Its key uses are for military applications.
These are remarkable developments, Taylor, marking the start of a structural investment cycle that will shape markets for decades.
So stay with us as we zero in on potential sector winners here on BTV.
The new NATO commitment for Canada clearly is to advance from 2% of GDP spend up to 5%. What that means is essentially a near tripling of the defense budget in less than a decade. We just came from seeing a doubling of the defense budget literally in the last 18 months. So taking that now to 5% of GDP really means going from 64 billion upwards north of 160, maybe even 180 billion, depending on how GDP develops over the next several years. And that's year over year. It's not spend it once and then foot off the gas. It's really going to drive a whole new energy within industry. And I think it's all going to result in a game changer for Canada.
As Canada accelerates toward its NATO commitments, a unique opportunity is emerging for the Calian Group, one of the few publicly traded defense contractors in Canada, with capabilities spanning military training, health services, cyber and IT solutions, and advanced space technologies. If you're looking for a pure-play Canadian defense company with real momentum, this could be it.
Historically, 70% of all the money that Canada spent on defense went outside Canada. Their new announcements indicate that they want to have 70% of that done in Canada. That will allow them to focus on large prime contractors like Calian to help them develop and deliver new solutions for the Canadian Forces.
Calian's credentials speak for themselves.
We're one of the largest suppliers of defense solutions in Canada today. Our differentiation really comes from our track record. We've worked with the Army, the Navy, and the Air Force for over 25 years, and we've since, over the last 5 years, expanded that to the UK military and NATO. The other one is we do bring a whole host of not only people, but technologies together, so we understand what their mission is, and we're able to bring the right solution to achieve that mission.
Calian's contracts with the Canadian Armed Forces are typically longer term, which has helped lead to a growing bottom line.
Revenues in 2025 were over $800 million, and defense and space accounted for approximately $500 million of that revenue. Over the last 10 years, we've grown on average 13% per year and done that profitably, with EBITDA growing 16% over that same period.
And they're still looking to grow.
We're focusing on Canada and Europe for growth. We've made investments to grow our footprint. We've used our M&A agenda, which looks to find companies that share similar culture and serve similar customers and acquire those companies to help expand geographically. We've done that for the last 5 years, and we plan on continuing that here into the next decade.
With tailwinds picking up, Calian is on the path to sustained long-term growth.
We've been able to grow this business in what has been a more neutral environment, and now we're looking at an environment where defense budgets will triple over the next decade, and they are looking for sovereign solutions, and I think Calian is one of the best companies in Canada positioned to take advantage of that.
And to add to the investment thesis, Calian is sitting on $1.4 billion in backlogged contracts, a pipeline that should provide them strong revenue visibility for years.
Critical minerals like copper and lithium have dominated the spotlight in recent years. Another strategic mineral is starting to find its way onto investors' radar: antimony. It's a source of untapped opportunity, and one company, NevGold, is poised to take advantage.
Antimony is a fascinating mineral. It was not one that was well known by most people until around 2 years ago. Its key uses are for military applications. It's used in every munition fired in the world, along with flame retardants. And it also has technological applications being used in chips and semiconductors. So it's highly strategic because of those two factors. And when you look at the antimony market globally today, around 90% is controlled by Russia, China, and Tajikistan. So there's a big mandate within North America, and specifically the United States, to build a vertically integrated antimony supply chain so the country can be self-reliant.
It's a pressing need that NevGold's flagship project is primed to address.
Limousin Butte is located in the state of Nevada, which is the best mining jurisdiction globally. And one of the key attributes of the project is it was a past-producing gold mine. And that gold mine left all the antimony behind. So there's large quantities of antimony in the historically mined gold leach pads, which is a near-surface opportunity for NevGold to be the next and only pure-play antimony producer by 2027. Due to the fact that it is an oxide deposit, makes processing a lot more simple and a lot lower cost. There's a really nice phasing of the project at Limousin Butte in terms of achieving near-term production from the historical gold leach pads focused on antimony, while we also advance the rest of the project, which has oxide antimony and oxide gold, and looks like it has a large quantity of both of them. Both commodities have reached all-time high prices in the last 12 months. And when you have dual commodity projects, it's also very advantageous because you have optionality from an operational standpoint, while we also mitigate our risk.
NevGold expects to produce a mineral resource estimate for the project in the coming months, while it continues to advance two more potential company makers, a gold and a copper project located in Idaho.
When we return, we look for potential stars in the dynamic energy space.
And at a time when the U.S. government is very focused on advancing nuclear energy for the entire fuel cycle, we are focused on providing the fuel to fuel that.
We'll be right back. You're watching BTV.
What we've seen is a desire to continue to electrify, both in Canada and globally. And Canada has what the world needs, which is those critical minerals like lithium, cobalt, graphite, copper, and the development of those mineral mines in Canada, as well as the processing, is a huge opportunity for us to get behind. And the government and the private sector is certainly trying to do that. And then domestically, in terms of supporting our own needs, we need more of all of the above. And that means that we need to produce more oil, we need to produce more gas, turn that gas into LNG, we need more critical minerals, both domestically and to supply to the world market, and we need more renewables, solar, wind, geothermal, and nuclear energy as well. I think we're moving into a build economy in Canada, and in a build economy, that attracts investment. And I get very excited about that.
With nuclear energy re-emerging as a reliable, low-carbon energy source, countries around the world are looking to secure their own uranium. One early-stage U.S.-focused developer is gaining attention with its massive land package in one of North America's most historically productive uranium districts.
Verdera Energy is focused on in situ recovery amenable uranium assets in New Mexico. We have 400 square miles of private mineral rights, about 88 million pounds of known and historic resources. Recently, we've accumulated the largest privately held database in the state, which gives us a huge value add to the company. We just completed a qualifying transaction financing of $20 million, so we have $25 million in the bank. So we're in a really solid financial position for the next few years.
The company holds 4 key assets in a district that has accounted for 40% of all uranium mined in the U.S. since 1948.
We have 4 projects in the portfolio that amass the 88 million pounds. The Crown Point project, West Largo, Ambrosia Lake, and Nose Rock. We will focus on several $1 million on our Crown Point project, which was our qualifying transaction. My favorite project is Ambrosia Lake. Ambrosia Lake is a past-producing underground mine. 70% of the district in the north is held by BHP. We hold the 30% in the southern portion.
Verdera has positioned itself well as energy security and domestic uranium supply become more of a priority.
The U.S., in their nuclear renaissance, can't achieve their goals without New Mexico. The U.S. is the world's largest consumer, with 48 million pounds consumed, but it's only producing about 1 million pounds a year. The Ukraine situation really highlighted that we needed to be able to bring all of that home, to supply all your own uranium. And at a time when the U.S. government is very focused on advancing nuclear energy for the entire fuel cycle, we are focused on providing the fuel to fuel that engine. I am extremely excited about working in New Mexico when what we are potentially able to extract is so vital to the future of the United States.
In a market where large-scale U.S.-based uranium opportunities are rare, Verdera looks increasingly valuable. Next up, U.S.-based Carolina Rush with their copper-gold opportunity.
Carolina Rush is an exploration company listed on the Toronto Venture Exchange. We're exploring the former Brewer Gold Mine in South Carolina. South Carolina is the home of the first gold rush in all of North America. We believe with both gold and copper, it's a very compelling project. I think there's 3 things that make us stand out. 1, we have defined ounces in the ground. With only 36 holes, we've proven 500,000 ounces of gold in a maiden resource. 2, we have funding right now with our partner for drilling deep holes, which for a small company with a big target, it's great to have a big partner. And 3, we have discovery leverage. So depending on our exploration success, the scale of this could grow pretty significantly. We're also very excited to be working with Oceana Gold Corporation. They have the Hale Gold Mine, which has 5 million ounces of gold, and it's only 15 minutes away. So we're in a great neighborhood.
Don't go away. When we return, 2 more companies that should be on investors' radar.
We've got a really strong, rich history of creating value for shareholders, from project identification, taking those projects up the curve and either selling them or spinning them out.
We'll be right back. You're watching BTV.
With lithium demand surging worldwide, an Australian company is making moves in the U.S., advancing a large-scale asset in Oregon and announcing a strategic move that could unlock even more value.
Jindalee Lithium, we're solely focused on the McDermott Lithium project on the border of Oregon and Nevada. We've got a really strong, rich history of creating value for shareholders, from project identification, taking those projects up the curve and either selling them or spinning them out. There's 3 things that really make the McDermott project stand out. The first is the size and scale of the asset. 21.5 million tonnes of lithium carbonate, project life that exceeds generations. The second point is US government support. We're one of the first 10 projects added to the Fast 41 transparency list alongside projects owned by Rio Tinto and Albemarle. also got a cooperative research and development agreement with the Department of Energy to work on the project. And then the third point is our plans to Americanise both the project and the company.
Jindalee's strategy to Americanize involves spinning out their U.S. lithium project into its own dedicated company.
We've just signed a business combination agreement which will combine our US subsidiary High-Tech Minerals with a US listed SPAC corporation called Constellation Acquisition Corp 1. That will form a company called US Elemental, which will be listed on NASDAQ in the third quarter of this year. And it's really an opportunity for US investors to get direct exposure to one of the US's next emerging lithium developers. But I think my pitch to investors comes down to three simple points. Tier 1, really strategic asset, large long life asset, producing battery grade, American-made chemicals. The second thing is the lithium market, where we're basically entering a multi-year bull market. We're just at an inflection point now. And then third point's around valuation. We're spinning this asset out at a US $500 million valuation. We think that's really compelling value when you compare it to our US listed peers, and it's one that US investors should take a very close look at.
If having one of the world's largest lithium assets wasn't enough, Jindalee's spin-out company, US Elemental, is expected to list on the NASDAQ in the second half of this year.
Next up, here's a company we recently started following.
At Evolve, we're building a next-generation royalty business that's focused on copper and base metals and critical minerals. We're focused on scouring the earth to find the world's next projects that are going to supply the world with the commodities needed for electrification and the transition to the digital economy. And we do that by providing capital to these projects in exchange for royalties, which are long-term participations in the revenues of these mines. And what that does for our investors, it provides a way to invest in the underlying commodities of these projects with less volatility, less exposure to the operating costs and the operating risk that typically is present in these projects. We have access to a large number of opportunities where we can get significantly higher returns than what we typically see on these royalty transactions in this sector.
We'll highlight more supercharged opportunities in the energy sector when we return.
We've invested, we've built, and we've commissioned the first ever end-to-end natural flake graphite production line in the United States, and now we're scaling up to meet about 40,000 tons of domestic demand.
We'll be right back. Welcome to Invest Better with BMO ETFs.
Joining us today to discuss an effective and easy-to-use investment strategy Canadians should consider is Erin Allen, Director of Direct Distribution at BMO ETFs. Erin, what types of investments work well within an RRSP?
Yeah, thanks, Taylor. When we think about investing for retirement, it's really about maximizing returns and managing risk. Many Canadians also really don't want to overcomplicate things. They want to keep it simple. And that's why asset allocation ETFs really resonate with Canadians. They're simple, low cost, well-diversified solutions to help you manage risk, making them a really powerful tool to help you manage for retirement.
How can investors use asset allocation ETFs to grow their investment savings?
Well, asset allocation ETFs, they're an all-in-one ETF, meaning you could just invest in that ETF in your RSP. Each fund holds between 6 to 8 underlying ETFs that keeps you well diversified across global equity and fixed income. So you can really choose the mix that works well for you depending on your risk tolerance and time horizon. If you have a longer time horizon, you might look at something like ZEQT or ZGRO with more equity. If you have a shorter time horizon, you may look to ZCON or ZBAL with more fixed income. And then as you approach retirement, because you're in a tax-sheltered RSP account, you can actually shift between the ETFs to meet the needs.
So how do investment fees impact retirement savings?
Cost is critical in terms of generating long-term wealth. And at BMO, we recently reduced the management fee on our popular all-in-one asset allocation ETFs to just 15 basis points. That means more money stays in your pocket and it compounds faster over time, potentially even allowing you to retire earlier.
You're watching BTV.
For the past 8 years, Titan Mining has been successfully producing zinc at its Empire State Mines in New York. Now, Titan is expanding beyond zinc and positioning itself for future growth in the North American critical minerals sector.
We're part of a wider group of companies called the Augusta Group, which has a 30-year track record in the industry in taking assets, developing them. We are the United States' fourth largest zinc producer. We're also the United States' first end-to-end natural flake graphite producer in over 70 years. So we really are a critical minerals hub here in upstate New York. It's been a very transformative year for us. We've obviously had record production on the zinc side. That is largely supported by the capital investments which we've made in the company. We make about $25 to $30 million in EBITDA annually just alone from our zinc business. We've invested, we've built, and we've commissioned the first ever end-to-end natural flake graphite production line in the United States, and now we're scaling up to meet about 40,000 tons of domestic demand, which is about 50% of US domestic demand. We're already a 2-commodity operation, and now we're looking at going into the third.
The third commodity is germanium, used in communication and defense systems, and is present within the existing zinc processing streams.
These minerals are of absolute importance to the United States economy, be it from a defense perspective or be it from a semiconductor and AI perspective, because both germanium and graphite are highly controlled by China. And as we are trying to move towards a more balanced world and diversify our sources of supply, Kilbourne and Empire State is becoming very important.
The initial backing of the Export-Import Bank also signals the importance of the projects to the U.S. government.
What it really means for investors is they see initial United States government underwriting, resources, backing going into the company, and that's a significant amount of work which has obviously been done. And more importantly, their signal to be able to support us with close to $120 million or more effectively for the purposes of the graphite project.
Titan is partnering with mining giant Teck Resources, who currently monetize the recovery of germanium at their Trail smelter plant in Canada. Exciting times ahead. Taylor, based on what we've seen, it's clear that defense and energy aren't just cyclical plays anymore.
I agree, Jessica. They've become core parts of national policy. And for investors, it adds up to years of predictable spending, real demand momentum, and opportunities that stretch from tech to mining to manufacturing and infrastructure.
Thanks for joining us today for BTV Business Television. I'm Jessica Katrachak.
And I'm Taylor Tone. Follow us right here at Business Television and be part of a growing community turning insight into action. And until next time, may your portfolio prosper.